Welcome back to another video, guys. This is a weekly recap, and I have charted up the entire month's price action. Actually, I'm going to put in the high time frame candles so you can see exactly our PO3 opening and closing for the month and the week. And today we're going to be reviewing the price action of this week, which was July 12th to the 17th. And starting, we're going to actually go to the 8th, which is Friday's distribution of the previous week, to start our analysis off. Kicking off the charting, we're going to look at the daily time frame. I know we've been consolidating. This just looks nasty. It looks nasty for all of us. We're all looking at the same chart. And I want to take a look at how actually this week and last week, because we did go over the weekly recap last week, and it was pretty clear for price action. We had a profitable week. I ended up passing the funded accounts, but this week I am break even and have limited my trailing drawdown because I got into profit and then went back to break even on the accounts. So I'm going to tell you how this week we actually had 3 clean days of price action. This distribution leg was actually very early, 3 in the morning. So we weren't able to trade that, and I couldn't trade Friday because Trade of 8 was shut down. So sad. But there was still good movement, and on the high time frame, it is giving us a great read with the charting that I have on today. So let's start at the new month open. The new month open, this is right here. We can see, we're going to look on ES, the 30th. Right there, the new month open. This is our first week of the month. And this first week of the month, we have as a filler week. This is just our range, our opening range. Our 1 hour is correlated to the week, and our 4 hour and really 90-minute is correlated to the month. So you look how clean the 90-minute looks. I have this 90-minute breaker mentioned up here. We're going to get into more of these confluences, but let's start at the beginning of the month on the 1 hour chart. Get a little bit more of a read. And I don't want to pull up YM today because most of what I'm just going to be talking about is a review of price delivery. We're not going to go into intraday setups too much, just overall how you should be reading the month as it plays out and how you should be reading each week as it plays out as well, because they all connect, and we're going to get into that immediately. So this opening week, this new opening month week ends right here. So that is Sunday, July, when we start getting our actual cycles on the week. This is our monthly cycle, which is our new monthly PO3. This is actually our opening right up here. It is at 6 p.m., which is this high for the monthly candle. What I used 12 p.m. just because we can extend it even just to show you. 6 p.m., this high right there is going to be our open. So after opening, what this first week is doing, and it's tradable, right? This is completely tradable price action. It is harder to read because we don't have the quality price delivery of a week to use for ranges for the entire month, and not really giving us a range of sell side and buy side, which ended up being a high that we took to send us lower to the low of the month and our previous month low. So on this opening range, it is harder to trade, but it's still tradable. Coming into the actual week, the first week of XAMD, XA manipulation distribution. And I want to tell you is the distribution leg on a range, whatever range it is, it could be intraday, it could be the week. I'm looking at gaps that aren't filled yet in the optimal trade entry. For what reason? Why am I looking at these gaps? Because in these gaps, we are going to retrace not to the full end of the range, because that would just be an entire market maker model without intraday delivery on the higher time frame or in the lower time frame, right? We can retrace and then create SMTs that send us lower or higher from there. That's why opening bell gives us the manipulation, helps us find that direction in the market. But the gap here is important. It's unfilled. It is an SMTF, but it is our unfilled gap. And you can see we tap down right into that perfectly on the 90 minutes. We don't have a gap. That's why I don't always use the 90-minute. I do use the 1 hour and 4 hour for this. 4 hours is a bit harder. That's more of a higher time frame. So what I like to say is 1 hour for the daily. If you're looking at daily ranges, let's see if we can find a market maker daily range. I can't really hear, but daily range, I would say 5-minute and 15-minute gaps are ideal in the OTE of the daily range if that's something that you're wanting to read. But for the week, the 1 hour is perfect. For reading price, however, I actually am leaning towards more for the 90-minute. I'm really liking 90-minute CISDs as well as 90-minute breakers. 90-minute is just such a clean candle at the moment because we're getting rid of almost a third of the noise of the 1 hour. Because look, the 1 hour just extends us, the 90-minute really tightens it up. And the 4 hour, the one above that, is just too little information, right? That's like 4 candles in the day. And then I actually have been looking at the 6 hour candle more, and this is prime for the month. But leaving the higher time frames and coming back to the 1 hour, let's continue reading the price action for the month. So we retraced in the distribution leg of the OTE. Like I mentioned, manipulation was here, so this is our distribution leg. Our distribution leg OTE is marked at CE of that. We have a retrace. I'm going to take this off now. And what I have marked on these yellow lines is just last distribution leg, which is Friday's range. Mark the OTE of that, and now we're coming into the new week opening gap, which is this gap. I'm actually going to put on my indicator for a new weekly opening gap right here at this high. We're going to also do that on ES, and it shows the new daily opening gaps, but we don't need to pay too much attention to that intraday because it's just, I can take it off, but they're so small, I don't need to. So retrace into the range. On Sunday, we have our expansion. Accumulation does not really look like accumulation. I mean, we see it in the range. We are volatile and the wicks are just nasty, but it doesn't look like accumulation because of the fact that we have that large range. So what we're playing XAMD off of and AMDX off of for the week is really where our high time frame SMT is. That is going to confirm the week for you and then the rest of the week's direction. And really, the previous week helps out a lot with that. If I go back to the 90-minute, we can look that last week gave us a sell side range. So we had a opening for the month. We had sell side. In the first week that we had XAMD, we created a weekly high, which the previous weekly high was our doubling weekly cycle. These are the main confluences for the movement lower on the week for this week. But previous week, we created our high and we had sell side. Perfect range. Sell side was swept, and previous week high is kind of just in play here off of the opening of the new month. This is actually an SMT, now that I mentioned, off of the opening because we are like completely different right here. That is very different. Not a time-based SMT in the cycle, but just a difference in how we're trading. If I go to the 4 hour, you can see we are trading in very different ranges in ES and NQ. The range, these these buy side liquidity targets are 2 of them that have not been hit and only 1 of them on ES that has not been hit because we were trading into the range, creating this crack correlation that really sent us down this week on Friday. So going down back to the 1 hour, we're going to look at the week's Tuesday. I can take off some of this noise on ES because most of our charting I want you to be looking at NQ, and I mean all of it. So what I'm looking at here, CE of the range. On Monday, we have an expansion, accumulation. We tapped into the OTE, distribution range of the gap in the OTE. After that, what am I looking for? I'm looking for a retrace into the range to the OTE of this range, the range of the week. Because this is telling me now if we're going to move lower from here or we're going to move up to the new weekly opening gap and move higher from there or lower from there, right? Because we know nothing at the beginning of the week. In fact, everything is on the table. Our job as traders is to find out how the direction of the market manifests itself with the higher time frame, the month, the week, and daily. It's both cycles and just candles, right? Candles, but time over price. Both are very important. ICT is specifically talking about reading candle structure with his concepts, and he does have time-based concepts, but it's mostly PO3, candle structure, and reading price action. Quarterly theory is, for the most part, time-based opens, which are levels technically, but they're timed and timed cycles, which we have on the bottom here. So after this retrace, what am I looking for? I'm looking for what manipulation is going to happen, or if I see this as accumulation, manipulation at this low, and distribution, are we going to move higher from there? So this could be like very well both of them at once during this time, right? We could move higher from previous week high because that is what ES is doing, or we could just be creating SSMTs to send us lower, which is what we ended up doing. Now that we identified the beginning of the week as either AMDX or XAMD, it's time to find out whether it is one or the other. So after we have at least two trading days, we're more confident in an XAMD or AMDX pattern. But by Wednesday, we are confident because Wednesday, usually Tuesday, Wednesday, or if it's very late Thursday, will give you the cracking correlation high time frame to send us lower. And I wrote that up here as a doubling weekly cycle. We can see that as previous week high on ES got swept. We can see that right here. It did not get swept. And we also have the weekly cycle inside of our current week. We have our high here, and we did not sweep that. Second weekly cycle is this previous week high sweep that we did not get on at, where was it? Actually at this time. So very, very late. I was looking more here, but this is actually where we got our 90-minute hidden, which sent us lower, and this distribution cycle, DC right here. So DC distribution was on Friday, sent us lower to not just the low of the week, but last week's range low as well. Because we had this OTE here generated, because we created very high time frame SSMTs, our range was confirmed. And how can you look at this? Because really, before this breaker block, before I could see on the 90-minute that we're shifting down, this looks bullish. And that's why I love using the 90-minute. 1 hour is kind of a little messy, right? I said that. I don't want to look for CISDs on the 90-minute. And the 4 hour just gives you two less candles, right? I can't do that on the 4 hour. So 90-minute is the perfect way to read CISDs on the higher time frame for the fractal 4 hour and monthly PO3. That is my take. I love using the 90-minute for the monthly because it just gives me the exact amount of information I need and very precise when it comes to just candle reversals. Look at this breaker block. Came right to this. If I even go to the 4 hour, we have the 4 hour inversion. Order block did not get traded above, not even to CE of this order block. This is our 4 hour order block, which is inside of our 90-minute breaker. So pairing, really, you should not be pairing uncorrelated timeframes together. But if we're looking at price alone, then not time, we're just reading structure, and it is okay to do. But the 90-minute, remember, translates to, and look at that 4 hour breaker. Look at the, okay, that's a top tick right there. That is a top tick. That 4 hour breaker is a top tick. I can't believe that. It didn't even look like it hit there, but it did. So, like I said, the 90-minute is correlated to the 5. So using that for time frame alignment, right there. That was top tick. I'm telling you, once you read candles, you can see a lot more than you think. And there's a lot more to see than you think. But 90-minute correlated to 5, use that for intraday. Use that for an entry. Do not do that for reading price action because you have to use the 15-minute. We have to look at the 1 hour. We have to look at the 1, 2, and 3 minute. There's still more to do. So off of this, you can easily see why we moved lower. I mean, the SSMTs speak for themselves. Doubling weekly, a daily cycle, the hidden 90 that was so aggressive. A hidden 90 alone sent us into a 90-minute breaker and retraced us almost to the low of the week, which really just gave us relative lows right here, relative equal lows, to move us lower because we already have this breaker. We have a CISD on the higher time frame. Our new weekly opening gap, previous week high, is filled, right? We didn't even fill the new weekly opening gap here. And it was edged to probably by 20 points. And our previous week high was swept. So what are we doing after that? I'm looking for where is our generated liquidity? What are we doing? We generate sell side, we generate buy side. We generate sell side, we didn't take out buy side. Now we're changing structure, and where are we going to go? Well, on the month, a lot of people were mentioning we got a monthly gap down here. It's that time of the year where we got a monthly gap, and it's retracing close to it. And so the previous month low was the drawn liquidity for really the entire month. So far, the entire month. So coming into the next week, I'm going to be excited to see what happens. Are we going to pivot a little bit? Are we going to retrace to OT of the range? Or are we going to continue lower? These are the things that we're going to be looking for. And oh my God, dude, I hate that my chart resets all the time when I go to move the time frame. Not all the time, but it's annoying. All right, so a lot of charting, but we broke it down. It was fairly easy to see after the fact. But now that I'm telling you how we could be looking at each new day based on the previous day and the previous week and in the scope of the entire month, you should be able to see how these time-based highs and lows on the new month open will help you read the direction of the month's price action. And if we just look at some of these other indications, I want to put you onto an indicator that I just recently found, and I am going to use it on NQ. So now we are only looking at NQ. All the charting is taken off, and I want to shout out this indicator. It is all, almost all the quarterly theory tools except for the cycles below. And it's just going down, separating them: true quarter open, true year open, true session quarter open, true month open, true weekend, down to even, I've never seen this, true nanosecond open, which is traded on the 30 and 15-second chart, which is a little hidden we might get into in some later videos, but investigate for yourself and you'll see that this indicator really gives a lot and shows a dashboard as well. I can also separate the days and weeks right here. We can show a weekly separator, a daily, and this helps just reading the day, the week, how the month looks, mostly how each week looks through the lens of each day and each day's range. Utilizing OTE. I'm telling you, OTE is kind of slept on for daily ranges. I mean, I love to use it really on anything. On anything, I will look for OTE ranges, especially like after the sweep. I'm looking for this high. This is easy. Looking for this high to get swept next, and that happens in the following day. That's just basic OTE. We're looking at premium of the range or discount of the range, and we're looking at what ranges we're retrading in, what are we pivoting from, high time frame, internal OTE, right? I said 0.7 of the range of the distribution expansion leg. Now we're retracing to OTE of the new weekly opening or the new Monday expansion range. Then OTE traded back into CE in the breaker block, trading down from that because we traded into OTE of the CIS, not just the CISD, but the breaker. Trading into the OTE of the breaker, we rarely ever get up to 80%. So that would be up here. We don't even trade a 0.705. We barely trade above the breaker, and realistically, like 0.62, we don't even trade to. So we barely get above 0.5 of the range. I mean, just look where the candles are closing. This is on the 1 hour chart. If I go to the 90-minute, it's even more aggressive, right? Just not even getting any closure in that 90-minute breaker. And I'm using the bearish candles because when we're looking at a breaker, I'm looking at the candles that are creating this internal high and low before our higher high and our lower low. So that is our breaker, and it does not have to be the opposing candles. I know some people say you got the bullish candles and then, okay, I'm just gonna cut that. And on top of this, I'm going to take off a bit of the charting because I do not need it currently. But on top of that, we do have this box right up here. I want to pay attention to this. It says all the true opens here. From the year, if we go to the daily chart, we can see that yes, this does include the year. This includes true session quarter opens. Look at these draws. I'm just telling you. True year open, true month open, all of these true month open in the current month, which we just swept. So I'm expecting that we kind of retrace a little bit, or we have a good daily gap that we could use to send lower if we're getting to these actual draw liquidity, which is what I'm looking for, the true session quarter open. But it's a little bit lower than that, which is discount sweep of CE, the range. That is the one that I'm looking for us to trade to. And I'm actually not sure. We'll have to see as time passes. But that indicator, I really encourage you to investigate it. It's pretty cool. Now we are looking at Friday's price action, and I just want to show you that this indicator, the 30-second, the true nanosecond open, where does it open? It opens exactly at previous month low. In this, you have a 15-minute, a single 15-minute fair value gap tap. Opens, taps into this fair value gap, you have an order block. This isn't trading to CE of the 15-minute. This is how you read the 15-minute. And yes, we do. Do we have opening gaps below that got traded into? Yes, we do. So safe stop is below here. You enter based on the trend moving higher in the true nanosecond open. That is ideally like a 40-point stop. Looking on the higher time frame, which is really just a 1 minute, which is incredible when you think of a session open that opens like that. We're looking at this holding above CE. Now the true session open, if you did get in on this tap and you want the highest confirmation stop loss and nano session open, gives you incredible precision in the market. Let's go to Thursday and we can see. I'm actually want to put on New York session because I don't want to search for this and waste my time. New York AM session, that was Friday. New York AM session. If we look at the true, let's look on the 30-second first, and then we can see, and it's not showing historical. Okay, I have to change the setting. I guess that's just for the current trading day. So we can see I put back 100 historical nanocycle opens, and this is in New York session. This is every 23 minutes we have this nanocycle open. Look, I complained about this. Didn't complain, but I said that I was sad that I missed out on this trade. Instead of using the breaker, I can also use the nanocycle open. We're on the 30-second chart, and I can use this nanocycle open to determine a great stop loss. Fair value gap 30-second above the nanocycle, and take profit at the low of the week with a 1 to 3.5 R, with the stop being above this candle right there. I'd like to keep it a little bit in the CE of the wicks, not just at the top of the body of that order block. And we look at the 1 minute, where does that put us? That puts us in basically the same trade that I wanted to take, but I wasn't confident on the SMT that created this high. So I didn't take this trade. In fact, I ended up missing this long, because if we go to, no, and if you go to the previous video, I actually missed this and over traded. My entry was, if we look at the true nanocycle open, I entered on this fair value gap, which is actually 1 minute. True nanocycle open says that, okay, we have an SMT. We're trading above it. We are now having a 1 minute inversion for value gap right here, which I entered at this body low. Putting my stop, even 10 a.m. open price, because I moved my stop right here, I got stopped out. If I just moved my stop, limited my stop loss to this low under the nanocycle, even if we go to the 15-second and find the lowest time frame gap that has been trained to, okay, this traded completely, so I can put my stop right here. That is a 29-point stop. I'm limiting my risk by nearly half at 25 points right here. And I'm still in a valid place with risk for the trade that I was looking for, which is trading back to the OT of the range, because I wasn't sure that this was going to get broken because of how it looked on the 15-minute. Because if we look on the 15-minute, we basically created a market structure shift on ES, and we didn't on NQ, and I was expecting this to retrace. I knew it was going to retrace. I didn't think it was going to come all the way up here because I was bearish, so I was willing to take it to OT, and in fact I was correct, but I did not have the confidence to hold through 10 a.m. price, which is very sad because it was a great trade to be in, a 1 to 3.5 R, and it was very little risk, to be honest. I just got over fearful. Going to Wednesday, let's look at Wednesday New York AM session through the lens of the true nanocycle opens. So this is now, we're looking at Wednesday's New York AM session. Opening right here, true nanocycle open. We have our reversal. It opens. In fact, after it opens, 2 minutes later, we have a market structure shift that is identified by this, two bearish candles, and the wick high being broken right there. We have a bullish fair value gap that we tap into and change direction to then sweep out where it is 9:45, which is the morning prime correlation. I'm strictly looking at the time-based true nanocycle changing direction of the market or continuing direction after a CISD. That is what I'm looking for, and that is why I love using this, because on the second time frame is honestly the best entries for the reversal. And if you're looking at the true nanocycle open, it just right there after 10 a.m. we have our shorts, which went much lower. And I actually remember I did trade this day. Okay, I do remember trading this day. It just kind of looks different when you're looking at the second chart with no charting. But we use this true nanocycle. And here's another one getting created that we trade immediately down from, which also I did mention that 1030 sent us lower. Our 1030 price was here. These two candles are 1030. 1030 sent us lower, true nanocycle, and by the next true nanocycle open, if you wanted to exit, you would still be right there in price, which is an incredible range. Either for the 30-minute PO3, we have a true nanocycle, and our 10 a.m., we have a true nanocycle. That's why I love to use it, because it aligns perfectly with how I trade the 30-minute, the 4-hour, and the 90-minute. You see our new true nano microcycle open, true nanocycle open. I love this. I'm so glad I found this, and I'm hoping that you will use it too, because For reversals, it's scary. There's a lot of movement. You're on the lowest point in the market. You're where it's gonna reverse or we're gonna get stopped out instantly. And I understand that. So having the confidence of the CISD and the true nano microcycle open is very, very important. Right here, we had a kind of lackluster. We had like waiting for 10 a.m. open. I remember we had news. We had a speaker at 10 a.m. So 10 a.m. candle. That is these two. We're on the 30-second chart, so we can see the nanocycles. We have. I mean, I did enter higher. I entered like right here, but waiting for this nanocycle, we can see that the CISD off of this, and there wasn't really an entry. You kind of had to be higher for that. But looking at the opposing way, CISD off the nanocycle, we have 1 minute. No, we don't. We probably have a 3 minutes or 2 minute breaker that we trade back into the inversion for value gap of. Using the true nanocycle, we can go down to the 30-second and even the 15-second and see that trading back into this, we can easily long off a limit order 30-minute tap, stop loss at CE right there, and a target of opening price. Opening price would be right here. So using the true nanocycle open is very important, especially because it's like really just lined up for 10 a.m. PO3 and 30-minute PO3. I mean, they come every 23 minutes, so that gives you great time in between. Not as much as a true microcycle open, but enough that you can catch the reversals and continuations on the PO3s in the opening, which is the 30-minute and the 4-hour. Alright, that is the end to the video. Sadly, my computer is still bugging because I have barely enough storage to create a 30-minute video and download it. So use this information coming into the next trading week and every trading month after that. I hope this helps you and benefits you in the future, and I will see you guys in the next video.